The next pair we are going to do is the Australian dollar. Okay. Now in the Aussie dollar, if we look at last week, our buying point was the 103.44, and we have a structural long point, which actually was our buying point initially. The other one is the 110, which is the all-time high, which is the 110.17. And our structural short point is the 102.59. So let me put these lines on my chart. So right, looking at this, guys, this is a very good close. The only concern that I have is this: that high is 103.70. We did put a high here of 103.77, and we closed right at that high. This is what we call a big range day, and we have specific rules to trade the big range day. So the simplest thing about the big range day, you do not want to buy the Australian dollar unless it trades above the high, which is 103.77. Anything below the 103.77 is not, I repeat, is not a buy on the Australian dollar. So, and in this case, you also have that we have a structural point over here, which is the 103.90. So this is what creates what we call a double structures, if you will. And I'm going to give it a different color so you can see what I'm talking about. You can see now there is a slight distance between the daily high that we have over here, which is the 77, and that structural point, which is the 90. So basically the difference between those two is about 15 pips. And what this happens, it creates a double layer, if you will, a double layer of resistance. And therefore, since we closed the week at 103.70 and I have a structural point at the 103.90, then the 103.90 is going to be my long point and my structural long point. And you can see how explosive the move happened towards the end of the day. So this is what we call a choking way, or an exasperated close. So it's a close that doesn't give us comfort. It doesn't. Yes, it's a strong close, but it is what we call an extra strong. It's too strong. This means people are being squeezed out of their position before the market closes. It's not a natural close, and therefore we have to be very cautious about it. Okay, if it's unnatural, then this means that there was a special circumstance that took place Friday at 5 o'clock, and we have no assurance that the conditions that was available in the market on Friday is going to be the same conditions that happening on Monday morning. If somebody got squeezed over here and was trying to get out, well, he's already out. So unless we have continuation to the upside on Monday, then we're going to stay away. So my buy point is a 103.99. My structure long point is 103.99 again, and my stop is going also to be the 103.99. That's on the long side. And on the short side, this here, the 102.98, could be a shorting point, so I can go short below the 102.98, and I have my structure short at the 102.55. That is my structure short right there. ST means my structure, and therefore I'm going to go short below the 102.98. I'm going to go short below 102.98, and I'm going to place my stop above the 103.28, which is my market side. This is my market side, and my structure short point is the 102.55, and my short stop is 103.28. All right. Right. So for the Australian dollar, we're going to be buying the Aussie above the, where is the Aussie? We're going to buy it above 103.99, and if we do my structure, the 103.99 is a long point and a structure long, and it is a long stop. So this also market is going to be one of the ones you're going to look at if you're going to work. And if it fails, we can go short below 102.98, and of course if we do that, we have a structural short point at 102.55, and we're putting our stop at the 103.28. Okay, that is the Aussie dollar.